Good morning, traders. This is Brad Matheny. This is a quick little update. Today is the 30th of August, almost at the end of the month. And we're looking at the RSP, which is the equal weight S&P 500 ETF. And I wanted to highlight these little circles out here. This is a weekly chart. We've had a beautiful rotation into flagging into this breakout range, into secondary flagging. And I want you to understand that, this flagging pattern, when you get down to the area of the actual rally or pole before the flag, we're looking at a move off of this flag rotation up here into the 198 area. So let me come over here and drag this. If this is correct and price technicals play out as accurate as I expect, we're looking at a rally up into this 198 roughly level to up to this 217 level. So understand that this is the equal weight RSP, equal weight S&P 500. We've had this big flag breakout off support, moving into another flag pattern. We've got dual leg patterns setting up here. One leg is this one right here. I'll make this a bright blue. And the second leg is this one right here, from this low roughly. Remember, I'm using what I call rejection levels. Oops, sorry, down to this low. And that sets up our peak right up here at 217.74. So in reality, as much as everyone wants to talk about some sort of a crash event or some sort of a major crisis taking place, the reality is we are probably going to be looking at another rally. This is weekly, or a continued rally up into this first target, which is 13%, possibly before the end of the year, and a second rally, carryover rally, maybe up into this area, which is 23, almost 24%. So, and again, it does hinge on the premise that we hold above this low level as support, and it does hinge on the premise that we don't have any type of crisis, major crisis. Now, everyone's talking about, commercial real estate or consumers, and there are processes in place to handle, a liquidation of assets, foreclosure, bankruptcy. I mean, there are processes in place to handle a lot of this type of minor activity. Yes, consumers are stressed. We're all feeling it. Try out here in California where food and gas and everything is super expensive. But we are also growing GDP extensively. Let me try to show you this here. US GDP. I'm not sure how quickly this has been updated. So here is weekly. It goes back to 1960. Wow, this is so understand that we are growing GDP quite extensively while let's see, US debt. Economy, US government debt. While our debt level stays over here. So here's our debt level and here's our GDP. Now, what will happen over this time frame, let's see if we can't go to daily. So what will happen over this time frame, this looks like it's quarterly, is that we will see debt levels mitigate over time. So they will continue in some sort of an upward fashion, but GDP will skyrocket. And GDP will be outpacing debt probably over the next 7 to 12 years. And this is going to be a rising consumer income level. This is going to be a rising, essentially, cost of living. This is going to be a rising output. Same thing happened. We don't have the data going all the way back, but same thing happened after World War II. We had a very solid rising in our debt level during World War II, up to 104, 105% debt to GDP ratio. And then the GDP just shot up. GDP shot up to increase where we're at. So you can see here our debt levels at 34, our GDP's at 27. We will likely see GDP skyrocket over the next, maybe 2, 3, 4, 5 years to levels far exceeding our debt. And it's going to happen for the world, but for the US markets as well. So let's go back to RSP real quick and understand that this is why. Go back over to here, flatten this out. Okay, let's get rid of this. And let's take a look at this again, because this is why I believe that we are going to move into this vortex rally. So I'm going to shrink this down, and it really comes down to the concept. Here, I'll leave this out so everybody can see. It really comes down to the concept that we are beginning a new phase to this rally. So if this was our base, which I believe it was, and we're moving through this rally, I'm calling this a wave 4 correction in this area, leading to the beginning of a wave 5. And I think wave 5 could be extensive. The reason I believe it could be extensive is we are moving into a period we have not seen in quite a while. And when I say extensive, this is really what I'm talking about in terms of continued rally. Now, yes, there will be corrections. Yes, there will be little 4, 5, 6% moves taking place that we will have to deal with. That happens in every market. We always see little 4, 5, 6% type market moves. But the real rally phase here, the real vortex rally, I think is going to look something like this. And I think is going to be very aggressive for traders, where we have an A, B, C, D, E move way up here taking place in the markets that traders are just completely unaware of. So I think you're going to find a lot of people talking about a black swan or a gray swan or something that's going to be, the markets will unhinge. The markets will unhinge. We are going through a period that no one really considers, and we don't have the data going back far enough, but we're going through a generational cycle that is going to lead to a settling of events. So hypothetically, the generational cycle is typically between 15 and 20 years. So I'm going to go here from 2020 out to 2035. So that's going to put us over here. And that's going to be a major restructuring of societal, what's the word I'm looking for? Societal expectations. So it's going to be a possible destruction of old, antiquated ways and the rebirth of new, more efficient constructs. Then, after this, we move into what is called the rebirthing, basically, phase, which is a phase where we move into a period of real rotation. And that's going to probably be combined with something like this, where we get the markets move maybe into a downward phase a bit and then come out of it. And then lastly, can't get it any tighter. Whoops. Lastly, we then move into what's called the high phase, which is where we get massive growth to the upside. So won't let me go any further. Drag this over. So this is going to be a phase where we are going to see potential consolidation, potential rotation, potential restructuring. This is kind of a rebuilding of the foundation. So I'm going to mark this with, let's call this green, darker green, and border blue. So this gives us a really solid opportunity up until this 2023, 2025, or 2033, 2035 area. This area is probably going to be a peaking area. And I say that with fairly solid confidence that we're going to see the markets reach a peak, possibly doubling or tripling between now and this 2031, 2033 area, and then rolling into a consolidation period, which is going to likely be, a bit of a downer. So understand that this could be a moderate pullback given where we're at here, still holding up about 50% of the range. So understand from where we had our wave 4 pullback back here, wave 4 pullback over here to the wave 5 peak way up here. If I'm correct, we're going to see a pullback roughly into this 50% area. I'm just drawing that by eye. So in reality, instead of redrawing, if I were to just move this up to about there, that gives you an idea of what we're looking at now, 30, 40 years into the future. And this, again, could change. But what I really wanted to highlight today is this. We are moving into a very solid, expansive range in the equal weight S&P 500 ETF. And I believe we are going to be moving up to this area, ultimately moving up here into this 216 to roughly 198 area. And again, so this is the real big move. You've got a 13.5% to a 23, almost 24% rally setting up between now and maybe the end of 2025 in the markets. This is long term. It's not going to happen in 2 or 3 days. This is long term. And we are protecting right now this level. This is our protection level at 159.40 roughly. Okay, guys, that's it. Talk to you later.